Talking about the consumer price inflation index as well, Jahangir, because, of course, we extensively discussed the WPI number, but it's the CPI number as well, which deserves a fair bit of attention because, that is the number that effectively comes down to affect all consumers. What is the number that you're working with here? Do you think it will continue to sustain above the 10% level?
Yeah, I mean, so we've been sort of looking at CPI inflation, the new CPI index, much more carefully, given that it is possible that in a year from now the RBI might formally shift to that as the key indicator of inflation. And that's been, above in double digits for quite some time. And more importantly, if you see core inflation there, that's been raging very, very
Jahangir,
fierce.
I'm going to have to cut you short. We've got the number. It's coming at 6.87. That's the headline number for WPI. This is against our expectation of 7%, which clearly is a positive number as far as the markets go. Jahangir, your initial reaction to 6.87 against the 7.25 that we had in June?
No, that's a very positive sign that the inflation, at least the headline inflation, has come down much lower than expectation. I think this is one of the very rare times that headline inflation has come below expectations. One really has to see the details as to what drove that inflation number down. Was it a one-off event, or was it something that was where the core inflation actually fell much more sharply? Without looking at the details, it's very difficult to say that. I think one must also be concerned that this isn't a signal for the government to say that the battle against inflation is over and they're winning it, and therefore push RBI to start cutting rates and easing monetary policy. I think we need to be careful about that too.
Sure, but again, Jahangir, the fact that we are still in a monsoon period that hasn't looked too good, and going by the assumption that the remainder of the monsoon is going to be as bad as the first half of the monsoon, on the food inflation front, what are you expecting? Are we looking at food inflation possibly going into double-digit domain?
Yeah, more or less. I mean, food inflation will very likely go into double digits. But I think, again, I really don't think that's where the concern would be. The concern would be that in the 6.8 number that got printed today, what did core inflation do? If core inflation actually fell, then this would be a sign that the economy is actually weakened to a point where there is sufficient amount of slack in the economy now developing. I think that's the thing that RBI will try to infer from what's happening to core inflation. And if that's what it actually infers from this, then I think that it will try and think about spurring growth up. So I really don't think at this point in time food inflation is something that RBI will be terribly worried about. It'll be far more worried about is what really happened to core inflation, and whether this if it is a decline. I haven't seen core inflation numbers, but if core inflation actually declined, whether this is a sign that excess capacity in this economy is building up.
Sure. So Jahangir, we have that number. Manufactured goods inflation is coming at 5.58% against 5% earlier. So would you say that's clearly bad news, and that by itself can possibly make the Reserve Bank of India hold back?
Yeah, if that's what happened, then that's bad news. Because that basically says that, look, as far as the part of the economy, non-agricultural part of the economy that Reserve Bank can actually influence in monetary policy, things haven't really changed very much. So the 6.8 number is likely to have been caused by one-off events of either the pass-through of the decline in commodity prices or the slight appreciation of the currency that we saw that month. So these will be one-off events, and given the fact that food inflation is likely to build up in the rest of the quarter, and the fact that core inflation hasn't really come down, that would tie the RBI's hands pretty much. If that 5.5 was actually 4.5 and if food inflation was 10 or 15%, I think the RBI would be much happier.
All right. Okay, so Jahangir, will come back to you in just a moment, but Ramanathan, bringing it to you, the market somewhere seems to have ignored the core inflation number. They're focusing on the WPI, the headline number, and we are seeing bank stocks getting driven up. But do you believe the market is somewhere getting a little ahead of itself by expecting that a rate cut will come sooner than most expect?
No, actually, there is no expectation of a rate cut in the market, even in the September policy, I would say. If you see the results of the bank stocks, clearly the more important thing has been the restructured assets and the NPA build-up rather than whether RBI will cut rates over the next 6 months or not. Valuations of PSU banks are pretty attractive, but surely more needs to be done in terms of NPA control before they get revalued. So the banking stock movement today is more, I would say, knee-jerk rather than anything else.
So Ramanathan, how do you expect the bond markets will read into this number of 6.8%?
See, the bond market is quite worried about the borrowing program rather than the current number which has come out. Clearly, there is going to be excess borrowing. If one goes through the paper reports today, the finance minister is reviewing the borrowing program for the year as well as obviously the fiscal deficit. And we need to wait and watch whether there will be negative surprises there. I would say a 30 to 40,000 crore excess borrowing would not be very negative for the bond markets, but if the number is much above that, clearly that will be a problem in terms of bond deals.
Right. So, okay, Jahangir, picking up on the point that Ramanathan made about the concern in the markets being the government's borrowings program, would you be very worried about what the final number could be? Because there has been one view emerging over the last couple of weeks that the additional expenditure that the government incurs by way of, monsoon redressal measures can somewhere be offset by the money that it rakes in through the 2G spectrum sales. Would you go with that? Would you go with that assessment?
I mean, look, the 2G money was already in the budget. The money for the drought relief wasn't in the budget. So there is no trade-off between the two of them until unless we actually believe that the 2G and the 4G money is going to be more than 40,000 crores. We have to wait and see what the amount of uptake is going to be at the end of the day. And whether or not Indian telecom companies can actually afford to put another 40,000 crores after putting in that huge amount of money for 3G license back in 2010. The additional expenditure that is actually happening is on the oil subsidies front. And more importantly, I think there is a significant decline that's taking place in tax revenue. So even if we do see an upside to 2G, 4G, which I'm, quite suspicious that actually will happen, you will still see a pretty large increase in the fiscal deficit until unless that one variable, which is oil subsidies, is actually tackled. Because that's the real game changer in all of this. Whether it's going to be 0.4, 0.5% of additional spending or will remain at the budgeted level. So, I mean, even with these things, I would say that, it looks very much like that the 5.1% of budgeted deficit for this year is very, very likely to be, to be surpassed in the actual outturn.
Sure. So, Jahangir, what would the JP Morgan estimate on the fiscal deficit number be? And again, do you believe the government will in any manner be able to push ahead with oil subsidy, by addressing oil subsidy, simply because of the political climate that prevails currently?
So we do expect the government from now till March to do something on diesel prices, but nothing close to the amount that we think it is required to keep the budgeted oil subsidies, to keep the actual budget subsidies on in line with the budgeted numbers. If at $100 a barrel average for the year as a whole, INR at 55, we are looking at around 10, 11 rupees per litre increase in diesel prices just to keep to the budgeted levels, not to reduce that level, but just to keep it to that. It looks very unlikely that the government is going to come up with anything close to that. So there will be some on the diesel front. So given the fact that the capital market still remains very soft, 2G, 4G uptake may not be as much. We've already seen the tax revenue already declining. We are probably looking at about a 5.8 to around 6% of actual outturn for this year's budget. So a significantly higher deficit number coming out.
Jahangir Aziz, appreciate you taking out the time and joining in with your prognosis of the inflation numbers. But if we look at the markets, they clearly seem to be enthused by that number. It's 53.64 now. We're well into the green territory. For the Sensex too, it's a 51-point notch up. And put your finger on any of the banks. They're all rallying, the likes of the Union Bank, Bank of India, ICICI Bank, as well as SBI and Axis Bank. So Ramanathan wanted to get your reaction to the markets. Do you think that, as always, as soon as you get the number, we see an absolute momentum in the markets, and that's just an aberration, or is the overall mood now going to be positive?
Actually, what's happened in the market is holding on pretty well, thanks to FI flows. If you see, while not a lot of flows have come into emerging markets, on a relative basis, despite the issues domestically, valuations are reasonable. And you have the issue of Chinese economy slowing down more than expected. So it's a lack of options which is driving money into the Indian markets and holding on the Indian markets at current levels rather than anything else. I would say today's movement is very difficult to reason out as to whether it's because of the inflation number, despite headline, the core inflation coming higher than expected. But on a whole, the market seems well supported thanks to FI flows.
Right, Ramanathan, thanks very much for joining us on the show. And as we speak, flashes coming on your screen. The Farm Minister has declared drought in parts of Karnataka and Rajasthan. So that just adds to the bad news on the inflation front. We've been talking about a bad monsoon, which we are pretty much facing. Likely to drive food prices firmly into double-digit territory and likely to stay there for some time at least. Now, so what we've had for July inflation, the monthly inflation number is a figure of 6.87%. This is much lower than what we were expecting. The ET poll was throwing up a number of 7%, and this is against the 7.25% number for the month of June. So it's, while the market has cheered the number, you've seen the Sensex climb back into the green. You've seen the Bank Nifty spike very sharply. It ought not really to be viewed as a very positive number for the simple fact that core inflation or manufactured goods inflation has actually gone up from the previous month to a level of 5.58% from 5% earlier. And that is going to be one big factor that's going to determine the Reserve Bank of India's decision in terms of whether or not to move ahead with rates, because you need to remember that core inflation is reflective of pricing power remaining with manufacturers, and it is also reflective of the ability of the market to absorb those higher prices. So not very good news on the inflation front, despite a lower inflation headline number that you've seen. On that note, we're going to slip into a very quick break. Stay with us. We got Market Sense coming up next.